Good morning, everyone. Welcome to the Euro Trade. I'm your host, Marcus Tokadi. I seem to have a bit of a cold today, but we're going to push through it. All right, what a day on Friday. Everything went a little bit nuts. So let's do a little overview for what happened. I didn't trade on Friday. I was traveling back from Belgrade. And to be honest, I'm happy that we did the reversal challenge instead of trading our own accounts on Friday, because it was a crazy one, right? Now, I do have a little short copper trade just to test the waters out. And gold is crazy. Gold is back at all-time high. After all that, it really looked like it found a temporary top, but it seems that every time it does that, it obliterates it and then goes back into the all-time high. So I need a little bit more time today to see what they want to do with that. If it's truly another up day, that will become obvious throughout the day, but this is way too early, and gold also likes to consolidate for this time of the day. But I'm going to be watching the metals. Don't know how much energies were affected by the news. I can see RBOB definitely reacted. So did crude oil as well. So everything went a little bit crazy. So we'll see what they want to do today. Sometimes if there are no further news, you can get stuck in a bit of a hangover day. So it's always prudent to, instead of rushing into trades, to just kind of try and be in observation mode for a while. Or at the very least use like the smallest positions, because whenever ranges expand, that means you need to look into your stop loss sizes, because you can't be using the same stop sizes as you did when we had some lower volatility. So we'll see what they want to do. Let's do crude oil. So crude oil continued to fall, should I say. It didn't really have much of a sentiment change or anything, because if we look on the very large time frames, if we have a look at the weekly chart, I mean, I was talking about this this range that we've been in for a long time now. And as far as I'm concerned, energies are just still chopping around. And yes, it's a big range, but the rotation from one side to the other is what we expect to see. So I wouldn't necessarily want to look for any massive trades until crude oil gets closer to 55. And then maybe once we're in this demand area, maybe we can have a look. All right, what did equities do? Now, I don't know whether I even have equities on my live. I don't. Maybe I have YM, but the rest of them I don't. And if we look at YM on the weekly chart, it did have a massive day, just like most of the other equities. So all-time high into a reversal. Is this the beginning of a pullback? Well, I wouldn't necessarily count on that, because it's an equities basically just generally go up unless it's a semi-apocalypse. So I would be, again, very careful trying to do a continuation. Right now we're sitting inside the entire daily chart on YM. And let me just have a look at the equities. Yeah, so ES is in exactly the same situation, where this whole Asia move is actually inside the Friday candle. Until that changes, I mean, I would be looking at more range-bound conditions, primarily because of the possibility of us having a bit of a hangover day today. I don't know whether there are any news today, so that's another thing we want to have a look at as we prepare for the day. I mean, not really seeing all that much. It's bank holiday today in the US. What is that? Yeah, what sort of bank holiday do we have in the States? Is this a short day today? Columbus Day, right. Okay. Well, we're still here. And sometimes for the quieter days, the metals do tend to keep moving. I've even seen crude oil that just goes into a massive day out of nowhere, and supposedly nobody's trading. Like, what's that all about? Yeah, so Tom, thank you. So Tom's saying Columbus Day bond markets are closed. Okay. High Volume says, I want to understand order flow better. Do you recommend anybody? I mean, order flow is really not that easy to explain. One of the reasons why you don't really have any courses on it is because it depends on whatever the situation is at that particular point. And just like price action, that can look very, very chaotic. And at one point, you can have the liquidity grabs. At another point, you can have orders that just go up to the high liquidity and then shy away from them. And this is the reason why you won't really find any good courses to account for all of the events. But, you know, some of the things to keep in mind when it comes to order flow is that the dome, the orders that you see on here, on my dome over here, they represent actual orders in the market. Now, the way I see it, I like to combine that with what I refer to as the large time frame order flow. And we can see that through the supply and demand on very large time frames. Maybe not on gold because it's just going up, up, and up. But if we look at the daily chart on gold, you can see that we kind of have a bit of a basing here. Now that means even though we are trying to go into yet another all-time high, at the moment it's not really doing that well. It's sort of consolidating and it's not, you know, screaming to the upside. That would imply some sort of a price action agreement for now, and that can change. But if you look at the older areas, you can actually start to see where the true volume came from. And for gold, we have to actually scroll quite far back, all the way to August. So what was the good quality demand that started this big leg up? Well, it was the one created, I would actually argue that this was created in May. And then we had a reaccumulation situation where we stayed range bound and then it just broke out. So maybe we can also have a look at copper. Let's go to the big copper. And here you can see the supply and demand a little bit better. Where is a good quality supply? Well, it's all the way up here. Why? Because we had a pretty decent move away from it, and it happened to be drop-based drop. So there was some sort of an agreement here. Then they moved away from it. Then they tried consolidating, and then they continued the move. So this is generally a decent quality supply that has a good profit margin. However, the way that you would look at the structures that just fall away like this with no return whatsoever, they are considered weak structures. So when the price runs into another demand, and here we have somewhere around 450, they hit the 450, and look at the move away from this. So it was a pretty decisive move, again, rally-based rally. Then it moved higher, consolidated a little bit, but ultimately carried on pushing higher. So that was a good quality demand. What happened when we reached it? Consolidation, and then a very slow move away. Now, granted, we were coming out of summertime. That usually happens. And at the moment, we have some smaller areas that are very weak. Why are they weak? Because the price action from them is messy. So I would classify this as a gradual move away. And if the market starts moving back through those, I don't expect them to hold. It is partially the reason why I'm in this copper short right now. Now, with intraday, you have to time your entries better than swing traders, because swing traders have the luxury of time. We don't. There's a time constraint, and if you don't get your move for the day or for the session, that means you could be right on the overall direction, but you will still end up with a losing day. That's where the order flow can come in, to effectively see what is happening at the level and whether delta is changing, whether there are committed buyers or sellers stepping in, how strong are they, and are they holding the price, whichever side. So with that, you want to see liquidity in the direction of your trade. Why? Because that's what they will hunt. Who's they? The wizards, market makers, right? The market maker role is to hedge any bigger sell-off or rally, but there is a bit of a caveat, which is something we've seen on Friday. When the moves start getting extended, they have to go along with the move effectively, and that amplifies everything. So in order for them to stay delta neutral, they actually have to offload some positions, and then that basically amplifies the entire thing. So that's how you see these massive days. But once you are in an outlier day, like on a Friday, all you will be looking for is rallies against the move, and then looking for those big sellers to come in. I like Bookmap for this purpose, because Bookmap can show you unequivocally whether there's volume behind it. So if I quickly just show you my copper trade here, it's effectively going into, so they tried to go higher, but now you're seeing some sellers stepping in. What's Delta doing right now? Delta is mildly neutral and mildly negative, and you want to see that. If Delta does not match the move and the price direction, that's called Delta divergence. So we effectively package all of that up in a nice little, nice little contextual awareness tool, and you can, for the most part, get some really nice movements. And then you have the true scalpers, the ones who don't use charts. They will just use the dome to express their positions and to effectively just hunt for liquidity. At this time of the day, copper is pretty slow, so maybe that's not the best one. But let's have a look at maybe YM. Do I have NQ? I do not. Okay. Maybe gold. Let's see gold. Yeah, so right now gold is very even on the dome. Usually the liquidity prices look a bit sticky outy. So instead of having, 8, 7, 7, 5, 4, you will see one big price with a ton of contracts sitting there. If that's against your position that you're doing right now, you will probably suffer some drawdown before anything. Why? Because they need to get up there in order to get their positions and then keep going. And there are people out there, okay, so now we have this 39 here, and they've just taken it. So, you know, that those kind of imbalances are what you want to see on the dome, but it will heavily depend on your style. Obviously, if I'm looking for a bigger move to happen, I'm not going to be staring necessarily at like a few ticks away from my entry. I want to see the move, and then once I get the move, I might look at order flow. So, you know, swings and roundabouts, different folks, different strokes, and all of that. Some people are happy just taking a few ticks here and there, and arguably looking at the dome and just doing that. But you still have to have patience. It's still not going to be necessarily 100 trades a day. It's going to be, you know, some of the best scalpers that I've seen, they basically just go, you know, 3 trades a day and they're done. But they take, you know, between 5 and 10 ticks every time. So that's the difference. For me, that's a very laborious way to do things because I like to be a low frequency trader. So I do anywhere from 1 to 3 trades per day. And if there is an opportunity from those larger time frame analysis to actually run a bigger trade, I will usually jump on that rather than looking for, you know, tiny little trades to happen. So we're all different, and order flow definitely is it's a bit tricky to do because of the amount of parameters that can change. So it's not always going to be the same. So that's why, you know, it's very difficult to explain it. I have some videos on my channel where I show bookmap and how some of the orders behave. And maybe I should do a few of those coming up. But really, it's just time. It's just time. And when you have a tape that's slow, that usually means it's going to be more difficult to figure out what's going on. If you have something that's more dynamic, like let's say ES during the first sort of 2-3 hours of the New York Stock Exchange, that tends to be a little bit better because you can see the flow of orders and you can get a pretty decent sense of what is happening. Now, I like to combine all of that with GEX levels, distribution curves from the profile, and also the strength of auction. But it's all order flow, right? Whether real time or historical, that's another thing. Does everybody need order flow? Probably not, I would argue. I would say that some people are absolutely fine trading without it. It's just I was very nosy. And, you know, I had a variety of prop jobs where one of them was more a market making position, and then another one they didn't really care. They just let you do whatever you want. Well, in the market making positions, you really need to do more trades. Why? Because you have a certain amount of volume that you need to fill in the day. And if you just do like one trade, that trade would have to be pretty large. And that's nearly impossible, especially on some, you know, markets that don't really have that much liquidity, meaning per price, right? So you don't, like if I wanted to execute a 100 lot position in gold, I would either have to take the entirety of the order book, and then I would still only execute 100. And on the day, they might give you 1,000, 2,000, 3,000 lots to fill, because you're a market maker at that point, and you have to fill a certain amount of orders to provide liquidity for everybody else. So, you know, how would that look, me trading just 100 lots? And it sounds like a hell of a big position, right? And usually it is, but it's just easier to generate volume with multiple positions. The problem that I have with it after 18 years of doing this is that it's a very labor-intensive job. So you can't really move away because you're staring at order flow and you're effectively just looking for basically small inefficiencies to take advantage of and then to get out. So yeah, order flow is just experience. One thing I would advise you to do is to open up something like OBS and then have bookmap and have a price chart next to it. I would also advise you that one of those price charts, time frame charts, be at least 15 minutes, maybe even 30 minutes. And then bookmap is your like micro order flow. So you will be what you're trying to do is to see what the event was and how that looks on bookmap at the time. How does a reversal look? How does a smash to Asia high and a continuation look? What sort of size of the bubbles are you getting? What is delta doing at that point? Are we, minus 200, they're coming up to 0 and then flipping? That's arguably one of the best ways to catch a reversal. But at the same time, by the time that you get the delta flip, you should usually already be in, because there's usually a level that is in play. It's never truly random. That's what I found. People think markets are random. I don't think so. I think they're fairly structured. And most of the time, people are just not objective enough, because we trade through our own lens of emotions. And a lot of the times, dysregulation of the nervous system. And a lot of the times, repeating the nervous system loops that have served us well at other times of danger. But if you remove all of that and try to be super objective and just literally go, okay, I saw that ES went into a huge sell-off. What did I see on bookmap? Was delta negative, positive? Did it keep growing? Was there any indication of a reversal? Was the reversal sustained? And for that purpose, you can definitely see stuff happening on bookmap. And I like the bubbles because they represent the I have it set for bid and ask. So the reason why I see them green and red is because I want to see who's kind of trying to take over at this point. But I'm also using it against the initial balance. I'm using it against the open sentiment from the distribution curve. So it's not just like, oh, Dee is just staring at bookmap and doing her positions. If I was doing that, I think some of my results would not be nearly as consistent, and it would be labor intensive, because I would have to like stare at the screen all the time, and I wouldn't be able to move away from the screen. And I don't like that, right? I don't want trading to be another 9-to-5 prison. Instead, I want to execute a position, go make coffee, maybe even walk. Like a lot of the times I will be walking my dogs. Like I find the setup and then I enter, and my stops are large enough to accommodate some of the bigger swings here and there. So I'm not somebody who nitpicks on stops. Whereas when you're a scalper, you would need to use appropriate stops, but sometimes you will notice that then most of the scalpers have negative risk reward. Why? Is because they are aiming for high accuracy, whereas I aim for like 43 to 45% accuracy. But my risk reward on a lot of my trades are at the minimum 1.5, but when I capture a bigger swing when it's available, that ends up being like 4, 5, 6R. So that's not every day though. So yeah. But yeah, order flow is useful for me as a point of entry or exit. Exit actually is a pretty big one, because if I've already gotten the move and I'm already sitting around 2R, I don't necessarily want to wait until that reverses on me. And most days will not be, how would I put it? They won't have the ability to bring you the big swing, because big outlier days like we've seen on Friday, they're not the norm. They're outliers, they're abnormalities. And if that's the only way you've ever made money in the past, I would be a bit worried, because those are lower frequency events. And in fact, if we look at the entirety of the year, so take like 12 months as a sample size, true days where the markets are just relentlessly either going down or going up, they don't happen that often. They will happen about maybe 8% of the time in the year. So, you know, the hard part about trading is to figure out how to make money on range days and on limited auction days. So what you do when there is some movement, but the price is just not quite reaching those big areas from the daily charts, and you know, you're stuck in a day where you can see they're consolidating and it's gonna go, but we're not fortune tellers and we don't have a crystal ball, so we don't know which day that's going to happen. And this is where all of these additional kind of fancy tools like order flow and quantitative extremes and GAX levels that I like to use, they can help you figure out whether there's, and obviously volume. There's nothing without volume. So yeah. But if we're talking about, you know, the overall market structure, the market structure doesn't really change. It can either go up, down, or sideways, and if you can work out where the top is, where the bottom is, and where the important inflection points are, Hogue likes to use that word a lot, and I like it. So what are the inflection points? Well, something like Asia high and low, those are inflection points. VWAP, are we underneath it? Are we below it? Is it flat? Is it sloping? You know, those kind of things. Some people argue that the larger time frame moving averages are also inflection points. They certainly can be. For me, the larger areas are also calls and puts from the options chain, because they frequently will act as magnets, and in many cases they will also act as stopping points for the further price movement. So yeah, if you combine all of that and then you have an expectation and an assumption of what should happen around a level, you can then look at order flow to see whether that's actually happening at that time as the level is getting reached. And then it's just down to whether the, like, let's say you have some sort of a call. We have one on gold actually. So we have a core resistance now on gold at 4,100. So let's go to gold. Now, because it's in an uptrend, I wouldn't necessarily expect gold to bring me some huge reversal today. But let's just hypothesize, right? So $4,100. So if we hypothesize that there's going to be some sort of a slowdown at 4,100, that would be one hypo, but you can also have the other hypo that goes with the trend, that eventually we're going to break it. Then another hypo would be that we retest 4,100 and carry on higher. As it happens, this is also Asia high, because we established the Tokyo high right around 4097, let's say. And that is your orientation point. So now if we go to gold on Bookmap, there is an interesting development here. So you can see the heat map is saying that there are some orders at 1497, exactly where that area of Asia high is. And right now we're below it. But, you know, the delta is overwhelmingly positive. Do I expect 4,100 to be a reversal? No. But can it bring me maybe a bit of a pullback before a further upside? Maybe. And is that a scalp opportunity? Yeah, it could be if I was that sort of a trader. You know, if I just wanted to capture a few ticks here and there. Could this also be a very big reversal point? Yes. They're definitely fighting, and you can see how many people, because one of the great things about Bookmap is that it remembers the previous orders as well. So if you look at the orders, well, you know, they keep coming in, and now they're trying to build a bit of a shelf here. So at this point in time, if I see, let's say, delta shaving off by half, and we're still underneath that area, we don't keep coming up and coming up to it and coming up to it and coming up to it, that could be a cause to look for a little scalp down against the all-time high. But because of the all-time high, you don't want to be the crazy person that picks the top. So you can grab a few ticks out of it, but eventually I would expect a pullback and then a continuation higher. And for that, you would need to capture it somewhere from another level that might not be order flow related, right? Maybe once the price gets there, again, you can have a look at how they're behaving. And here they are. So this is now a pretty large order to the upside. And now they've moved the orders higher. So where are we going? We're going higher. So the aggressiveness of participants in the run up to these levels that you see on Bookmap, that's also very important. How aggressive are they? How big are the bubbles in the on the approach? If they're just tiny and they don't really change to red like this, and then the volume is not coming in, because you see these people here, they sold for a while, but then there was no volume after that. So you can't run a trade like that. You need the volume to roll over something to the opposite side. So yeah, and then you need to just record your screen, record the chart, have some reference levels, and then see how all of that looks. And eventually you will start to see patterns. That is by far the best way to learn order flow without anybody telling you anything. Sorry, I'm just gonna mute my phone because somebody's calling me. What do I use to keep an option, the 9 option levels? I use a company called Mon-Thurs. Again, if you go to my channel, which Topstep have kindly posted underneath this video, I'm trying not to lose my voice here. You will see the latest video on there from the previous month is all about Mon-Thurs and how I use the option levels. But the option levels are not always clear. You do have some days where it's easier. The days when all of the option levels and the GEX levels are right next to each other, that becomes very tricky. Very, very tricky to figure out. And some people would argue that you can look at time and sales for that. You can, but to me, time and sales, it doesn't visualize the information as easily as Bookmap to me. It is useful, but just the way the bubbles tell you the size of the orders, and there's a heat map that remembered where they were. And interestingly, look at this. So the redder the level, the more orders sat there. And you can see they're still up there. Like, we're a little bit outside of the current 10 prices up and down area. If you're trading something like NQ or ES, you will have 100 prices, so you can actually go up and down the ladder. But for a lot of the alternative products, that's not really the case. So yeah, you can see them up there. Now, if they manage to hold the price with volume, and like I said, shaving off the delta to at least half of this amount, so I would want to see delta at about 500 or 400. And then if that holds into one of the major levels, then yeah, it's a possibility for a short. But, you do need volume to the downside to keep coming in. And if it's just like a little pop, that's mostly people just taking profits, and then you expect it to go higher. So now we have another heat map here. To me, this all looks like they're going to keep going. Because, the delta is not really falling. So it falls a little bit, then it comes back up. Falls a little bit, comes back up. And until that changes, I would expect every order block that you see to the upside to get taken. Smash. Jetin is asking, what plan in euro? So I don't know. I haven't traded Forex since like 2017. Not really interested in it either. Forex to me is on most days very low in ticks. I want products that move between 180 to 220 ticks per day, committedly every single day, nearly every single day. If that falls, I'm not interested in it. I looked at Euro last week at the request of somebody, and it was literally just I think it had like 93 ticks overall for the entirety of the 24 hours range. To me, that's too small. It's like, I would rather go stick pins in my eyes. Whoops, I forgot I'm still in that. Oh, it's what happens when you're sick. All right, I'm going to close the copper trade. That was supposed to be just a test, but then I went into order flow yapping and I'm sick, so my attention is not the best. Up, down, it says, how do I manage this trade? I've seen 10K unrealized on gold today, but it comes back and stops me out. Nice down. If you're seeing 10K and you're getting stopped out, you're probably full pointing it with 10 or 15 lots. And then, yeah, like, you can't do that on prop accounts. Like, I'm sorry, I'm going to do a rant here now. Unless you have like 50, 100 grand of actual account balance, not talking like, oh yeah, I signed up for an XFA. No, if you generated 100K in your account, maybe you can justify a swing of 10K. But just by the fact, the way you describe that, you're like, oh, I've seen 10K unrealized and then it stops me out. If it was a swing trade where you traded with like sensible size and then you saw it, you know, go against you, that would be happening for like hours and not in the space of minutes like you're describing. So I think you're trading with dollars in your eyes anytime somebody comes to me with 10K rather than X amount of ticks. So I'm going to ask you, how many ticks in profit were you? And, you know, if you say, oh, I was in like, you know, 10 ticks and it was like, what, 20 ticks or 30 ticks, that means you're in with too much size. And until you're further down the road with your account balance in the actual funded account, your risk of ruin trading like that is in the billionth percentile. What is risk of ruin? What kind of chance do you have of blowing up? Why? Because you're over leveraged. You're over leveraged. We've seen certain people posting on Twitter how much loss they suffered. Well, they were over leveraged too. You know, being high on hopium is not really a good thing. Like, if you, this is why I prefer options for swing trading, because you can control your risk much better. And, you know, sometimes if you want to do 2 legs of the option, it's going to limit your profit, but it's also going to save you from days like Friday, right? However, some people are just like, whatever, you know. Like, what are we doing? But yeah, if you're over leveraged and you are constantly getting stopped out, consider sizing down. Because, you know, nitpicking, like, let's have a look at 30 minutes here on gold. So when I look at this, we had a very good reclaim of VWAP at 40.52, 40.53. It hasn't really looked back. So let me ask you, what the hell are you doing? Like, in all honesty here, this is a trending move upside during Asia, so I presume you were awake in trading Asia. And yet you managed to somehow get stopped out in this. So that tells me a few things: that you're over leveraged, that your stop losses are probably not big enough to account for whatever gold is doing right now. And you're, yeah, you size down, increase the stop losses. And if you want to capture a swing, that cannot be done on like 5-10 ticks. Like, in fact, on gold, I use anywhere from 70 ticks these days. And sometimes when we have these increases in volatility, I would even use 100 to 120 ticks, and that means you have to trade with much smaller size than you normally would have. So it's just my take. But yeah, what to do? Increase stops, size way down, way down. Yeah, Uptown Funk. I would say that the 2 lots is too big. Like, let me show you my data points from my main charting platform. We are working within the average daily range of 656 ticks for the day, out of which 350 is designated range for Tokyo and London, and then you have COMEX with almost 500 ticks. And there is a thing called value at risk calculation. So what is value at risk? It's basically what can be the total disaster moment if the prices went against you on the day and you were just in a investing position, position trade. What would be the probability of you losing the account on the size that you're trading? And it can actually be used to figure out what position size you should be in, given the account balance that you currently have. Now, for most of you, if we look at gold, if we look at NQ, some of the worst days, whether up or down against your position, they go up to 5%. So your risk of ruin would be literally super high if you're trading anything more than about 2 micros. And usually prop accounts, we start from a maximum loss limit of 4,500. That kind of maximum drawdown is really, if you take the VAR, value at risk calculation, is really only suitable for trading 1 or 2 micros. It's just how it is. But it's not forever. You start on micros, you build up an account balance, you build up proof of concept as well. It's something that most people don't realize. They want to go from 0 to hero with no proof of concept. Their proof of concept is, I passed Topstep Combine in 2 days. It's like, that's not proof of concept. So yeah, 2 minis in a high volatile situation and nearly 700 ticks on the day. It calls for sizing down. Like 2 minis, that's a crazy amount of risk. And if you keep getting stopped out, well, that's an even crazier thing, because it means that your stops are not doing what they should be doing. Yeah. Trader X6 is oversized 2 combines and blew them. Upside profit 990 on my XFA. Yeah, so you upsize, that's what you get. See, I always say my flex is to trade with small size and still get the grand on the day. That to me, why? Because I captured a big move, right? And that requires selectiveness. Maybe I'll do a couple of trades where I'm, testing the waters out just to see whether we're actually still moving or not. But once I see my star setup and star opportunity, which, to be granted, to be fair, doesn't really come this early. It's why at some point we're going to be changing the time of the show. This is supposed to be DAX, as you know. But yeah, so if I'm looking for longs and golds, let's say, am I going to go long here when we're so close to the core resistance? No. I want a very, very decent pullback. So I will look for price points to tell me where that might be. It could be a quantitative extreme. It could be the edge of the value area. It could be maybe settlement price if I'm trading energies. Reversal down to settlement or up to settlement. and then another short in crude oil, for example. So on gold today, what do we have? Well, we have core resistance at 4,100. I'm not longing into that, but if we go over it and we end up in an outlier day, I would absolutely long it from 4,100 once we're above it, but I'm not going to guess that that's going to happen because nobody knows. So you can have a hypothesis and you can have, you know, a few test trades, but if you can't get in on a good trade in like 3 attempts on the same product in the same direction, or even worse, you start flipping and flopping like a fish out of water, what does that mean? It means that you are longing and shorting around the same area. That means that you, my friend, have lost the plot. That's an even worse thing than getting stopped out on the same move in the same direction, trying to get in on it. Because, you know, flipping and flopping, it means that you're like, I'm long, I'm short, I'm long, I'm short. It's like, what? Slow down, you know, just take a breath. And I know that, you know, that is sometimes still one of my triggers as well. So I'm not totally immune from that either. Where, you know, if the price action is slow and you're just sitting like +5, -10, +10, 0, -10. That's in ticks, right? And you're just looking at it and just going, it's like, is this thing going to move? And then you're like, okay, well, that hasn't moved. Maybe it's going to go down. But of course, then you're just chopping in a range, right? And then you just start to doubt everything. Well, this is where the intraday plans can be pretty useful. And the plans where you don't have the line in the sand. Oh, either it's going to go up or it's going to go down. Have different price points where you want to be a buyer and you want to be a seller. That's how you avoid that. But you do have to develop the strength to actually wait for those levels and to be okay with missing out. Learn the JOMO, joy of missing out. That's probably the biggest skill that you can have as a trader. Like the amount of times that grasshoppers, like I like to call people, people who like hop in and out and they want to catch every single tick. Like there's a perceivable move and they're like, "Dee, gold is going up," and I'm like, "Yeah, I don't really care." Yeah, you're gonna jump in. It's like, no. Because it's nowhere near my level. That's how you get jumped up. And sure, you might get lucky a few times. You'll catch like some massive move that you weren't supposed to be in on. But is that repeatable? And if not, that's the problem. I know what is repeatable for me. It's LME open, then looking at how the previous high in and around the high or low in and around LME open behaves. Then I have the reversal into the euro close. It's actually a whole 90-minute time frame where I can look for that setup. But then because I have that, if let's say I'm looking for a gold reversal long, but we never actually went into any sort of an uptrend prior. So now the euro close becomes a scalp opportunity. I'm not going to hold it until the cows come home because it's now against the trend. But then it becomes almost like a situational awareness moment where I expected this to happen because that's a statistically relevant observation and price behavior. When that doesn't happen, we now have something else to fall back on and maybe find a smaller trade, but a high probability trade nonetheless. To me, time is a huge, huge component. I always say time of day is a level. Because at certain times of day, certain things happen. And I have a few of them. I have one for DAX in the morning, which is what these shows were supposed to be about. Then we didn't get DAX, and then now we're looking at metals and a whole bunch of other things. Let's have a look at some energies markets. I think they might be kind of interesting today. Yeah, Tom says it's not really a holiday, only the bond markets are closed. Yeah, I'm not seeing holiday price action here. It's all looking pretty normal. I do hope my voice doesn't completely go because I think I must have picked up something on the way over to Belgrade. All right, so right now crude oil is sitting right on top of the value high, right around the 60 number. And then value low, 58.78. Settlement from Friday was, what's going on here? Hold on, let me just check my settlement times here. Yeah. Right, so settlement on crude oil is all the way down to 58.24. So way past this. No, it wasn't. That was the end of day. Settlement was 58.77. Yeah. 58. Now I'm just looking at the times of day. I don't know why I have a bit of a bug on my, this thing caused some issues. So settlement. So what am I looking for? And what time is this? Yeah, it's my time. All right, so 7:30 is the settlement. So, okay, so settlement on crude oil way down at 58.95, let's say. Wouldn't be surprised if I see that tagged, because there's not really too much to push this. I'm looking at this upside move more as a reactionary bounce from the big smash down on Friday, even though it wasn't as big as it normally is on some of the Trump tariff days. I would still consider this, medium strength. We also went into classic post and white cut reversal, which was happening here. So we had a downtrend, then we consolidated for the open, had that head fake for the NYMEX open, went the other way, tried to go lower, and then we have the post and white cut reversal. So touch of VWAP, couldn't break it, reversed, went all the way down. Again, post and white cut 90-minute time period that goes into the euro close. That is a high probability reversal time frame for crude oil and RBOB and heating oil. And we have another one. Yeah. Artificial intelligence says, do you consider regular trading hours gap on gold? Well, when there is a gap, yes, but if the gap is too large, like we might be in a situation today, this is where the regular trading hours are. We're way up here. So if that continues, this would be more repricing to me rather than a true mean reversion opportunity. And on a lot of the times when we open that high up, especially if it's like over 2.2%, just from some stats that I've noticed on gold, if it's over 2.2% open gap in relation to the regular trading hours, that tends to bring a hangover day. So it just chops around, big wicks either side, not really deciding, and becomes a bit of a nothing day. So the time when I consider mean reversions in relation to the RTH gap, and I look at the value area gap rather than the actual open or close, I would consider anything between 0.8% and all the way up to, on gold, no more than 1.5% distance. And then you have that medium sort of imbalance that should mean that the gap fill is on the cards. But unless that happens, and again, you know, shorts on gold, I would probably stay out of the mean reversion and then try and fish for buyers somewhere massively down. And, you know, they may not fill the gap completely either at that point because of the strength of the underlying trend that gold has. But something like copper, if that has a gap, I will absolutely be on top of that. And yeah, I'm still thinking copper might have, like, the problem with copper is that it had a big day, so it had a big day. This was so again, squiggle for London against the trend. that's gonna happen. Then we get to post NY cut, already signs of reversal, and then smash. So yeah, we'll see. Are these the old levels? Yeah, this is the full copper. Do I pay attention to the spread between the Shanghai and LME? I do not, because I don't trade spreads in that way. Those are both very important for the pricing of the metals, but I'm not going to be in copper positions for days and weeks where that spread might do something for me. The only sort of spread that I would look at would be the basis, so the difference between cash and futures. Otherwise, intra-exchange spreads, it might be a good strategy for someone, but I've never really been a spread trader. I was always outright futures, and before then, outright forex markets since 2007. And then from 2012, when I went into futures, I spent a year trying to hone intraday myself and failed miserably. And then in 2013, I went, and I was a really good swing trader, but I just couldn't make it work for intraday by myself. And in the end, I was just like, you know what? I'm gonna go somewhere where they can teach me how to do this stuff. And now we have TopstepTV, where a lot of us just lay out our concepts, just like, bleh, there you go. This is what we do. And you know, every coach here has got their own way of doing things. Just looking at how copper is moving today, it's pretty slow. So I think we're gonna have to wait for LME to happen. I don't know how much I'm gonna be trading because I'm feeling pretty bleh. And I also need to try and get better for fast markets tomorrow. So that's gonna be like 2.5 hours. But yeah, it's copper is still inside the massive value, so that's not very helpful at the moment. If I look at the London session, yeah, we're below it, but there was already an attempt at a mean reversion for Tokyo, and that succeeded. So this was the open for Tokyo. Sorry, Globex open already started this. Where is this starting? Hold on. Yeah, I thought so. I have the Shanghai exchange. Interesting you mentioned Shanghai. There it is on copper. So Tokyo did its classic establish initial balance, take out the range, and then fade all of this to its own value low, because Tokyo has a value low too. And it did it, right? This was a classic mean reversion. But the open for Tokyo was only well, it was 1.8, but like I said, between 1.8 and 2.2%. It's okay on metals for mean reversions. And then it just reversed from the value low. Now, value low reversal is one of my favorite setups ever, post mean reversion. So if I was awake, that would have been my star setup. Today on COMEX, so far, we don't have that. But London, like if we actually get up to the London area value low, which is up at 510.75, and then we also have the ADR high exhaustion around 511. That could be like the most ideal short for me. But obviously that's probably only, if it does happen, it's probably going to happen much later, much later. However, the problem is that if we get into COMEX, we don't have such setup available today. We're just in this massive area. So the probability of my star setup coming in on copper during COMEX is very, very low today. Because we would need to move way higher and then retest the edge of value. But yeah, it just doesn't look right for that. On the other hand, we could have some very nice range trades in copper. So if we assume that we're going to have a hangover day because we're also opening inside range, we could wait until the initial balance for COMEX is set and then look for failed auction and hope that the initial balance has some sides in it, because if it doesn't, then that's also not very conducive to any sort of good range, easy range trading, if there is such a thing. But yeah, for now, the only thing I'm seeing for London is either a continuation to test the Asia lows or going in off. And why? It's because we do have a supply on a 4-hour chart, which is here. So I would like to see that melt. But where it's going to start melting, I don't know. So we'll see. I can see the same thing as you. It could go higher to test the ADR high first, and that would be great if it happens in the next 3-4 hours. And if it doesn't, the setup is gone. So then the picture changes. Yeah, so here's the problem. So yeah, so Shay is asking Trader X6. That he's let me just find. Yeah, so here's the problem with high accuracy trading. So Trader X6. You say you have 92 to 94% accuracy, but I blow up because I oversize on one trade, because that's, I would call it hyper scalping, because if you are effectively just waiting for one small move and then you take it, yeah, you can get 90 to 94% accuracy, but that, just be very careful, because that doesn't work in live markets on any sort of size. There will be delays in execution, there will be commissions, and if you try oversize, but then they just don't fill your stop, because I don't know whether you know, stop losses are market orders, and they are not guaranteed. They are there if there's liquidity, but if there's no liquidity, the prices will just carry on and keep going. And then they will fill you somewhere, because, you know, they have to fill you, because market orders have to be filled. But it might be like hundreds of ticks away from your desired move. And then throw size into that equation, and you've got a disaster waiting to happen. So what worth is it that you have 93, 95% accuracy when you can't hold on to an account? Ask yourself that question. So, you know, I always say, I am like, look, I have days when I'm like, oh, 66%, 70%, 75%. Hey, I have weeks where I'm 100% profitable, right? But that's not sustainable. Neither is that my longer term statistic when I take. So let me ask you, would you still have that accuracy if you counted your blow-ups, all of the blown accounts that you had? If you counted those trades into it, what would your accuracy be? And I bet you it wouldn't be 95%, okay? This is where looking at your stats in a wrong way and not using a consistent, like one single journaling tracking system to see what your real accuracy is. So here you are boasting that you've got 93, 95%, but then you also blow up. So I immediately say to you, you don't have 95% accuracy. If I were to put you in one single account and I lock up the risk settings so that you can only trade one micro, A, can you make money that way? And B, you won't blow up because the risk settings will stop you. So you will manage to stay in that account. What would happen after 3 months in that same account? All of the bad decisions, all of the terrible trades, all of the, moments where you blew up an account, put them all in the same account. See what happens. And I think you're going to be unpleasantly surprised by the reality of what people consider or have high accuracy. Because I've done the VIP season now coaching, 2 seasons we've done. Whenever a trader tells me that they have such high accuracy, I look at their stats and we force everybody to go through the VIP experience, not resetting every 2, because obviously you only have 2 resets per month and then they're gone. So if you reset too often, you won't have the account and it's all going to be very difficult. You can still be there for the calls, but you don't have an account to practice on. And once we do that, those people who claimed they have really high accuracy, like I can think on off the top of my head about at least 7 people that claim they have 75, 80%, and 87% accuracy. Those numbers by the end of 3 months look like 13%, 13%, okay? But apparently they had 75 before, so really? 33 was one of the better ones. And then the third one, I think, was floating around 40. So far cry from what they thought they had. And they were like, oh, I'm surprised about that. It's like, yeah, because you're basing your accuracy on the successful days. And then you're blowing up an XFA, getting a new combine, getting the 95% because the market, either you behave or the market behaves for your strategy. And then you do it all over again. And you never get a sample size that's longer than like a couple of weeks. So it's like, that is not the true representation. So when I say I have 43% accuracy, I'm taking in the time period from 2013 through all of the mess ups, through all of the good decisions, bad decisions. Yes, oversizing sometimes. When I was younger, I used to oversize. I'm, going to be 45 soon. I don't do that anymore. 18 years of getting that into my thick skull has taught me that oversizing leads to disaster, so I don't do it anymore. Yeah, so there you go, Trader X. I lost 9 XFAs this year. All my losses were on one trade. Yeah, so your risk of ruin is too high. Yeah. High volume says, what risk settings would you lock up for him? All of them. All of them. I will put him on 150 daily loss limit, dollars, yeah. I would do a simple block on all the majors, so all the minis. And I would get them only to trade 1 micro gold. Because I think they're a gold trader, right? So, yeah. So, yeah. Are we going to see your tools on Topstep X? We don't know. I would like to, but here's the thing. The Topstep X API is only for orders, and as I've recently found out, not enabled for live accounts. So that kind of put a bit of a wrench in the works in what I was working on before. But you can't draw objects with API at the moment. I don't know whether they will ever have that. And right now, that's not planned. So what I am doing in the background, I'm going to, so rather than connecting myself to and my tools to any sort of a platform, we are going to have our Blatek levels in one of the utility discords. So it's not going to be some like, oh, Marcus Dorcas Discord. No, it's going to be Blatek Discord for levels. There will be like one channel for support, and the rest of it is just going to be levels. We are still working on bringing our tools to other platforms, but it's taken a lot longer, and we're getting there slowly. But in the interim, I've been working on this Discord thing to basically have the Blatek levels, and then you can take those and drag them wherever you want. Now, obviously, you're not going to have immediately all the fancy tools that I have here, and the fact that you can do a backtest on the levels as and when they were happening. But at least you will have, you know, ADR high, ADR low, ASR high, ASR low, value high, value low per session. So broken down per session, whatever the active session is gonna print those numbers, and then you can put like levels wherever you want, whether it's TopstepX, whether it's, you know, Tasty Trade, Motive Wave, like wherever you want to go, you can put the same levels on the chart. Yeah. Robert Faulkner says, I was thinking more as a way to anticipate the London direction as Shanghai rotates out and London comes in. Yeah, that usually just shows up as a liquidity grab above Asia high and then rotates. You don't need to look at the spread for that. What's the biggest impact I had in my trading career? So the biggest impact was pretty much blowing up 70K in the first 2 years after working for 2 years to build up the account from £2,000 to 70,000. Yeah, that wasn't, so that probably had the biggest impact on me, where I realized that I needed to know everything about fight or flight response and to lock that shit down, because fight or flight and letting the emotional dysregulation take over and just start surfing it, that's the worst thing you can do for yourself. So I spent, well, the next however many years, so this was from 2009 onwards, learning everything I can about neuroscience, how our brain works, how to prevent fight or flight, how to keep track of my mental triggers whilst I'm looking for a trade, and to stay aware of those mental triggers and then track them throughout the day. Now, at this point, I don't need to do that as much. Like, you know, I used to be irked if I'm trying an early trade and then a couple of them don't work out, then that used to throw me off. But now I'm just like, no, try one, doesn't work, you wait for much later in the day. So that's been the biggest impact. I know that's probably quite surprising for you. You probably expected me to say, oh, it was my biggest day. And my biggest day was 86 grand on crude oil. That was 2015, I think it was. They shut down some sort of an oil refinery in Iraq, I think it was, and everything started kicking off. And then crude oil just started running to the upside. So I saw a potential for an outlier day. I took in the fundamentals. I entered a trade. It was a pretty wide stop loss. It pretty much went my way immediately. And then single prints carried on printing all the way to the end of the day. Not settlement, actual end of the electronic close. So I held it. Wasn't even a big size. This is where I realized that is the key. Trading on not a big size and yet getting, you know, a massive day. Obviously it won't happen every day. So most of my days will be kind of singles or doubles. So singles or doubles, singles or doubles. And then eventually I get one big day. And if I do lose, I try never to lose more than 2 R on the day. So most of the time I will take off my trades earlier before the stop loss. And then I effectively have 4 attempts at minus 0.5 hour to do on the day. If I'm not successful, I will stop. So that was also a big game changer, being able to figure out when to get out of a position early before you get hit for the full -1 hour. There are times when I will fully commit to the trade and I will let it go to -1 hour. But if I can, and if it's gone into zero profit first, an immediate drawdown, I will try and kill it as soon as possible. So those were some of the big changes in my way of looking at things. But yeah, as for the biggest impact, it's literally getting smacked in the face by 70 grand and then learning how to avoid that happening. So that was by far the biggest lesson and by far the biggest impact, getting me onto that psychological journey and opening up the key to introspective behaviors. So rather than me sitting here and going, like as soon as I notice that I'm getting nervous in a trade, I shouldn't be in that trade, because it's like I need to be relaxed in a trade. And if something about it is making me nervous, like for example, if I enter a gold trade and it starts to spike around and immediately I feel emotions, I will just close it out and I will wait for things to settle down. Because I personally cannot manage a trade when I'm in that state, because it means that my emotional brain is taken over and I'm just switching off my prefrontal cortex, where my rational thinking is. I need my rational thinking, okay? So anytime things are flying around, I'm just like, if I can be calm through it, it's not a problem. Like if it's happening with the plan, but if something just kind of throws a wrench in the works, like Trump opens his mouth or something and everything suddenly goes the other way, that's not really something that I want to be involved with. So, and that's where I think many mature traders differ. So not freaking out when things start flying around. So yeah. How many minis did you have on that 86K profit? Not many. I think it was like 2 or 3 or something. Like really not many. It was just a monster day. It just kept going and going and going. And this is where like I said, I got the real sense of how sort of trading should be, even intraday, that you can make money on lower size and you don't need to be in with like, 40 contracts and then shaking as the prices are moving up and down. What instruments are good for for traders in Asia and London? Also, what's your view on Forex? Hate Forex. No regulation, because, partially regulated, but really Forex is a decentralized market, which is why I laugh when people go, crypto, decentralized. Yeah, we've had Forex for like hundreds of years. It's like, dude, like really? We want to go to decentralized markets, do we? So yeah, Forex to me is a dead fish swimming with the current, but not really swimming that far either, because it's just like 90 ticks. Like if you're lucky, you might get 150 on the day, but that's now considered an outlier in Forex. That's why I don't trade it. Most of the products are literally just like stuck between 50 and 90 ticks per day for the entirety of the 24-hour period. So I would say for traders in Asia, gold, copper, Nikkei, but we don't have micro Nikkei. There's only full Nikkei on here, which is very expensive. Maybe even silver sometimes, but I think gold might be a better option for Asia traders. London, very tricky, because London really is very suitable for DAX and FTSE. Other than that, other products they move sometimes. Don't get me wrong, everything moves sometimes. But how often do you get committed ranges that are very similar day in, day out for months and years on end. Not very often. The only thing that does that is DAX and FTSE. Why? Because DAX opens for Eurex, which is 7 a.m. an hour before a London session, and then you have FTSE that that is, you know, one of the main products that's traded on the London Stock Exchange. So we don't have those two, so in Topstep yet. So we might get it sometimes. Another question. My Uptown says, and there goes gold again after trail too tightly. Yeah, I'm telling you, man, like, you can't trail tight. If you're going to do a trail of 70 ticks. Don't do a trail for 10, 30, 50. You know, why? Because the ATR is massive. Like right now, I'm looking at the ATR on a 30-minute time frame, so meaning going back 9 candles. It's 100 points. It's 100 ticks worth. So you trailing anything less than that, you're not going to survive. And right now we're in a range. So it's like, increase the trail. Size down. My brain goes crazy when the emotional part hits me. That's when I stop. Any books on introspective or neuroscience for fight or flight control? No books. I mean, we can mention the old favorites, you know, trading in the zone and whatever, but I found that the best way to fight the fight or flight response, sorry, someone's at the door, so my dogs are probably going to kick off. Best way to fight or flight response is knowing what happens to you biologically and then working to disrupt it. The only way to do it is to shove the adrenaline that starts kicking up, rising up in your body as a result of fight or flight, is to go and lift some heavy weights. And lift them until you're in that sort of surrender mode, completely just drained. Why? Because glycogen reserves in your muscles are the fuel for fight or flight. So if you deplete those before you trade or while you're trading, like let's say you're trading, you feel emotions, grab something heavy if you're able, and just do the you know, quite a few reps. You won't be able, and somebody's going to ask me, oh, what about cardio? Cardio doesn't work. It works, but you might have to go do cardio for like a full hour. It takes 40 minutes for the glycogen to drain out of your muscles, and then also for all of those reserves to get out of your liver. It's like 40 minutes. You have to be like a hamster, losing 40 minutes. Whereas if you're lifting really heavy stuff that is kind of close to your body weight or close to your exhaustion point, and if you're like, let's say you're doing 10 reps, how will you know whether the weight is correct for you? The last 2 reps are almost impossible to finish. That's how I always used to do bodybuilding and weightlifting. So if it's anything less than that, if you can just rep it out, like kind of go 1, 2, 3, 4, 5, 6, 7, 8, that's too light. So increase until the point where the last 2 reps are just so difficult that you're about to die. And then rest for a minute, then do that again. And at some point, your muscles will just be like, okay. Then your fight or flight, it might still exist, but it won't have enough fuel to like fully go into overdrive. Anybody else says, oh, you know, take a walk and stuff and everything. That's fine if you don't have big problems with fight or flight. I'm a Mediterranean person who is very fiery, and I had rage issues. You know, have you ever seen, like, you know, Mediterranean women go into a rage? Yeah, that used to be me. Like, really, really angry all the time with everybody. And I'm very short, so I'm like, I used to be like a chihuahua, you know, it's like, but yeah, and then I stopped, you know, I went into trading and all of that just kind of melted away. And now it takes, I don't even know what it would take to maybe a troll that's being stupid on the internet. And even they have to keep coming back for like a month before I will react. And I won't be nasty to them. I'm just going to be like, goodbye. So yeah. Yeah, Robert says, I read The Hour Between Wolf and Man. Good book, but difficult read. Yeah, Anne-Marie suggested that for people. Yeah, until you start shaking. Yes, that's right. Uh, yeah. So again, the hour between wolf and man, I think it's not the inner psychology from what I remember. What you need to know about is how your body works at times when things don't work out for you. It's literally your body or your brain doesn't know the difference between reality. So true, like, let me start that again. Sorry, I'm a bit ill. So, your brain can't tell the difference between an actual death threat and some money lost. I spoke about this before. It thinks it's the same thing. Lion chasing you, you're about to die. Oops, I lost an XFA. Same thing in our brains' minds, which is complete nonsense, as we know. But your rational brain can say it's a complete nonsense, but at the back of my mind, my primal brain is going, no, I'm dying. And that's why it kicks off the fight or flight. So you have to disrupt that biologically. There's like another way to do it, again, takes longer because it's, involves yoga nidra or something where you completely do a reset of your nervous system. But you're not going to like that because you have to go lie down. You have to go cover your eyes. You have to wrap yourself up in blankets. So completely move away from the trading station. And then it's still going to take you at least an hour to stop thinking and to really get into the mindfulness. So anything else that people are advising, oh, go for a walk, not good enough. It's not going to drain your glycogen reserves. You come back at your desk, you're still going to kick up a whole bunch of emotions and you're still going to go back to being angry and frustrated and FOMOing. But once you've done weightlifting, you come back, and even if it doesn't work out, you just go, oh, well, that wasn't the level anyways. Like the whole thing changes in your brain. And nothing else has been able to, personally for me, stop the fight or flight for me, okay? That was the only thing where my rational brain comes back within like 10, 15 minutes of doing weightlifting. And it doesn't have to be, so lifting heavy things drains the glycogen faster. So the heavier, you obviously don't hurt yourself, but like I said, the good guideline would be 10 reps. And then if the last two are very difficult, then do 4 more of those sets, right? So 4 sets of 10 reps with the last 2 reps having to be very, very difficult. Ideally, you want to do compound workouts if there's nothing wrong with your back. Deadlifts are amazing. Clean and jerk, very, very good because you move your whole body. Squats, if your knees are okay. So anything that engages your entire body, you will get there faster. But if you don't mind just doing, like overhead presses and stuff, that might take a bit longer. So you may have to do like 3 different workouts and then 4 sets of 10 for those 3 different workouts. But it still shouldn't take you more than 15, 20 minutes. And then as soon as you feel your rational brain coming back, and you will feel it, you can then just come back to trading and you can just breathe better and make more rational decisions. Yeah, the lizard brain does not get it. The lizard brain doesn't speak English. It doesn't speak trading. All it knows is survival. VWAP means nothing to the lizard brain. Nothing. Price action, order flow, nothing. It's all just a lion chasing you. So yeah. All right, I think I'm going to end it here, and we'll see what the day brings. So it's not a true holiday. It is bond market's holiday. But let's see if we can either get more movement or end up in a hangover day. So I will see which one that is once we get closer to COMEX. Anyways, thank you so much for being here with me. I'm probably going to wait until post NY cut to do the next attempt for my trade and try to get better. Hopefully I won't get more sick tomorrow. But yeah, thank you so much for spending time with me. It's always fun to see everybody. At some point we are going to be changing the time of this show, but for now it's still the old time. We'll let you know when we do that, as usual. Until tomorrow, have a great day. Be very careful because we don't know what's coming today. Not that we know anyways. But yeah, just maybe give it some time, give it some observation, and don't smash in a trade at the beginning of New York Stock Exchange Open. Breathe, take in some information. We'll know more already about an hour to 90 minutes into that session, what they want to do with it. In the meantime, enjoy. This was the Eurotrade. I'm Marcus Oka D, and I will see you again tomorrow. Take care.